Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Apple's AI play. The iPhone maker reveals a partnership with OpenAI and a slew of new features. Elon Musk responds by threatening to ban Apple devices from his companies. We continue the tech conversation with the UAE State Minister for AI and Digital Economy. Omar Al Olama joins us to discuss the country's AI ambitions at 8:30 a.m. Dubai time. And Secretary of State Antony Blinken is in Israel today as he presses for both sides to agree to a ceasefire. The UN adopts a U.S.-crafted truce deal. It's just gone 8 a.m. across the Emirates. I'm Johanna Versace in Dubai. We're going to be talking a lot about AI throughout the course of this show. But before we do that, let me just get you caught up on how some of these key markets have fared. And guess what? S&P, another record high. You can see closed yesterday 5,360, up 0.3%. Yet another high for the year for the S&P as we head into another crucial week. Tomorrow, key indicators, we've got CPI to watch out for, and of course the Fed. Many in the market are watching out for a possible revision of those dot plot projections for the rest of this year. Could be construed to be quite dovish if they significantly revise them down lower. But the main event yesterday in tech space was Apple. Look at the reaction to Apple stock on the back of its announcements and some of the new features that they're introducing in AI space, as well as that partnership with ChatGPT. And you can see here the reaction not so pretty, down almost 2% in trading. We're going to talk more about that shortly and why the Apple stock reacted that way. Brent also in focus, and even though this morning we're slipping slightly, down about 0.2%, look at the handle. We're back at 81.50. This is exactly the level we were at right before that OPEC Plus meeting about a week ago. So we've come a long way since initially post the OPEC Plus announcement. The market reacted quite bearishly to the possibility of further barrels coming to the market. But since then, we started to inch back upwards again. So that's significant. And then France, let's not forget about what happened yesterday with a lot of these European assets. We saw massive widening out of spreads in 10-year OATs, about 8 basis points wider on the day versus Germany. Its biggest one-day jump since 2022, and does tell you that investors are getting very concerned about the political premium being priced into French assets as we head into that snap election. And speaking of political premium, let's take a look at what some of the currency investors have been doing in euro. I thought this was interesting because it tells you a lot about how people have started positioning. Look, this is a reflection of what positioning is like in euro currency. And as you can see, just in the last day or so, there has been a lot of negativity being built in. Traders have been buying these 1-month risk reversals, i.e. they're positioning for a much lower move in the currency from here onwards. So interesting in terms of market flavor of where the euro is headed. But let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio standing by. Avril, what are you watching out for this morning?
Yeah, Jumana, speaking of negative, we're seeing that on the Chinese benchmark as well as the one on Hong Kong. The markets there are back from a holiday and they're playing catch down amid those concerns lingering about the real estate sector, but also worries about how Chinese firms are really in the crosshairs of US and EU authorities. I'll get to that in a bit, but also take a look at what we're seeing in the outlier. The Nikkei is helped along by some of the chip-related stocks tracking the gains in their US counterparts overnight. Let's flip the board because the other bunch of stocks that I wanted to get you up to speed on, we are seeing Chinese battery maker CATL in the past 2 sessions. It's fallen about 10%, and this is as a group of lawmakers have tried to, advocate for it to be put on the US import ban list. EV makers in China also down. We're watching out for a decision on EU tariffs this week. And of course, the Apple suppliers in the Asia Pacific. Those are the stocks that are on the back foot after that AI event failed to impress some investors. Jomana.
Yeah, we're going to talk more about that. Thank you, Avril, in Singapore. All right. Well, Apple has taken the wraps off long-awaited new AI features, including a partnership with OpenAI, the maker of ChatGPT. The iPhone maker is betting that a personalized and understated approach to the technology will win over customers. It's a high-stakes bid to catch up with rivals in the booming AI market.
Recent developments in generative intelligence and large language models offer powerful capabilities that provide the opportunity to take the experience of using Apple products to new heights. Introducing Apple Intelligence, the new personal intelligence system that makes your most personal products even more useful and delightful.
Let's get more from Bloomberg technology reporter Mark Gurman. Thank you so much for staying up so late for us, Mark. I feel like the headline grabber here is that partnership with OpenAI. But is that not an admission on Apple's part that they are behind in their own AI technology at this point?
No, you're spot on, right? The headline grabber is the partnership with OpenAI, but it's a small but meaningful part of the overall story for Apple and artificial intelligence. Apple's taking a three-pronged approach here. They have an on-device large language model for their in-house features. They have a cloud-based model for some more powerful features that they've developed in-house. And then anything related to a chatbot, it's essentially ChatGPT built into Siri. That's powered by OpenAI. And it is an admission. Their large language models, the power they have, it is not up to snuff compared to what OpenAI has been able to offer for the last year and change. So they had no choice. If they wanted to offer a chatbot, they wanted to offer that more advanced artificial intelligence functionality, they had no choice but to either go with OpenAI, Anthropic, or Google Gemini. And OpenAI is the first deal they're doing. They're certainly working on others.
Mark, why is the stock reacting so negatively? Why did we end the session down almost 2%? What is it that investors missed or didn't like out of the announcement yesterday?
I don't think investors missed anything. I think it was actually Apple who missed a little bit here. What you saw was a suite of artificial intelligence enhancements across the existing portfolio of applications. What you didn't see was a fundamental rethinking of the iPhone operating system or the way the company's devices work around artificial intelligence. So I think you're still in the very early innings here. I think investors want to see more. Some of the Siri features that they announced, the ones that actually I think are the most important and advanced AI things that are in-house from Apple, those aren't going to ship until sometime next year. The artificial intelligence features are launching in a beta. So I think investors are seeing that this is going to be pretty preliminary for the next 6 months or so. There is more to come. The good news is that Apple knows that it has to integrate as much AI in its products as possible. The better news is that it seems like it's moving as fast as it possibly can. A 1.5-year turnaround to introduce an all-new platform built around artificial intelligence. It's not easy to do that quickly, and they did pull it off, despite how nascent it's going to be for the next half year or so.
Yeah. Well, I know many people were staying up to watch the event, including Elon Musk himself. He was quick to tweet a couple of hours after it that if this partnership does actually go ahead, he would ban Apple devices in many of his companies over concerns about security. So how big of a threat is this, and how much of a blow could it constitute for Apple?
Well, I don't think it's going to create a blow for Apple. That's one. Two, I think it's a little bit overkill to want to ban the devices from his corporate entities. But three, I think he raises a good point. We should, as consumers, as journalists, as investors, be concerned about the privacy implications of Apple's products. Apple can stand strong knowing that the privacy story on its in-house models are top-notch. They produced some white papers related to that, some documentation to show the advancements in their own security practices for its in-house AI layer. What they can't do is speak to the privacy protocols and practices of Microsoft Azure, which is where ChatGPT from OpenAI is hosted. They can't speak to what OpenAI does with the data. They can only speak for themselves. And now they're integrating a third-party chatbot deep into Siri, a first-party product. It certainly raises questions. So in summary, I think Elon is right. We need to question the privacy story here. But I think being so skeptical that you're going to kill the product from being able to be used in your corporate environment, I think is a little bit overreach.
Yeah, fantastic. Mark, thank you so much for the overview. That was Bloomberg technology reporter Mark Gurman, live from LA. And the tech conversation continues later this hour with the UAE State Minister for AI and Digital Economy. Do not miss our interview with Omar Al Olama at 8:30 a.m. Dubai time. There's a lot to discuss, including the country's AI ambitions, funding to achieve those goals, and security hurdles, of course. All right, and back to our main geopolitical news. The United Nations Security Council has voted to support a U.S.-crafted Israel-Hamas ceasefire plan. The proposal sets out conditions for a temporary truce, hostage prisoner exchanges, and eventually the withdrawal of Israeli forces from the Gaza Strip. Now, the resolution passed 14-0 with Russia abstaining. Joining me now is Stuart Livingston-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. And of course, this resolution from the UN passed during Blinken's trip to the Middle East. He's here for the 8th time, I believe, since October 7, trying to shore up support for this deal. What is the latest?
I mean, it's all feeling like it's pointing in the same direction, but I think fundamentally let's start with the resolution. Number one, I don't think it changes very much. It's a signal that the world, in inverted commas, broadly supports a peace deal. I don't think that's a huge surprise to anyone, given what's been said in the last several days. Fundamentally, there really is only one big international player here that can influence Israel's direction, and that is the US. And so, yes, we have Blinken in the region for whatever it is, the 8th, 9th time. And not to diminish, his abilities as a diplomat. He is extremely good at it, but he is up against a very tough assignment on this occasion. So we've seen progress here and there on the previous visits. Fundamentally, he has to get them over the line. This is supposedly their peace deal that they push forward. They seem to be stepping back from it now, and he's kind of going to give them a prod in the right direction.
Yeah, I mean, it seems to be the case that because it is a multi-phase process, Hamas will agree to the first bit, Israel won't agree to the later bit unless there's some full agreement on what happens to Hamas afterwards, and Israel have been pushing for full demilitarization or neutralization. But let me just ask you, from Israel's standpoint, we've had a lot of domestic turmoil, you can say, or political turmoil. Benny Gantz has now left the government. We spoke about it yesterday, not going to have an immediate impact on Netanyahu's ability to govern, and yet it does make him more reliable and dependent on some of his right-wing coalition partners. What is the significance of that in terms of their ability to actually agree to this truce?
Yes, I think it doesn't change anything in the short term, and I think politically you can never underestimate Bibi's ability to maneuver politically. He is the absolute, the master of that within Israeli politics. Gantz, on the other hand, again, as a military chief of staff, very impressive. As a political operator, a little less so. So yes, that doesn't change the equation. But now you obviously have, or you continue to have, this coalition government that has elements within it that are, quite extreme in terms of their views on how the war should be carried out and executed. And Bibi, to some extent, will have to continue to resist that. So does it change anything in terms of the short term for the war on the ground? Probably not. They continue to state that their goal is to eliminate the Hamas leadership. And just as you laid out there are some real differences here between the two sides. It's very hard to see what exactly is the pathway where you end up with a comprehensive peace plan, and more importantly, a plan for the day after.
Yeah. I mean, lots of questions. No wonder Secretary of State Blinken is here for the 8th time, possibly even 9th time. Stuart, thank you so much for joining us around the set. That was Stuart Livingston-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. And still ahead, we will get the oil outlook with Emirates NBD as traders await key reports from OPEC Plus and the IEA. But up next, we'll discuss a fixed income market strategy with Marlborough as investors watch the Fed's new dot plot. This is Bloomberg.
I think in terms of an attraction, German 10-year bunds and French oats, the 10-year there, their spreads have narrowed significantly in the past month or two relative to treasuries, and today as well by 8 or 10 basis points. So there's coming a point where European bonds are more attractive than treasury bonds, in my opinion.
Well, that was Pimco co-founder Bill Gross speaking after surprising election results in Europe rattled markets and sent French bond yields to their highest mark this year. Of course, that with the snap election announcement. So let's bring in James Athey, fixed income portfolio manager at Marlborough. Great to see you, James. Let's just start with some of the price action we got out of European fixed income yesterday. OATs 8 basis points wider after that snap election announcement. Was the reaction warranted?
Morning, Joanna. Markets don't necessarily like, shock, surprise announcements, and obviously don't like uncertainty. And we've been here before with French elections, and it's quite normal for us to expect noise and volatility in French assets when there is still the sort of presence of a threat from the extreme right on the political spectrum. So understandable, whether it's warranted, I guess, in the end, I still think consensus view is that it's very difficult for Marine Le Pen's party to win in the second round. I would share that view. And so ultimately, this is probably a sort of fade, but I think just given the starting point was relatively tight spreads across, credit in general and sovereigns in particular, it doesn't surprise me that we've seen a bit of widening off the back of the weekend news.
James, if I fast forward the next couple of months, this isn't all about political premium. There's also concern about the fiscal trajectory of France as well. They got downgraded not so long ago. Should investors start feeling worried again about this possibility of fragmentation risks?
Crumbs. Yeah, we're probably away from genuinely considering fragmentation risk, but yes, ultimately, we should be concerned that the fiscal trajectory in a lot of countries just looks incredibly unsustainable. But whereas in most places that is a policy entirely within the ken and fiscal and monetary authorities are ultimately the same. Obviously, in the Eurozone, you don't have that situation, and fiscal and monetary are separate. And therefore, you have this credit risk, which is inherent in the system. What the right compensation for that credit risk is, obviously, is very subjective and does ebb and flow over time. But France in particular, France and Italy, you look at their debt loads, you look certainly at the government as a percentage of GDP in France, and just the systematic incapability of politicians to rein in fiscal spending, to actually engage in the sort of reforms which are going to allow deficits and debt come down over time. The Maastricht criteria are so far in the rearview mirror now, it's unbelievable. And obviously in the pandemic, the fiscal compact and the various fiscal frameworks were completely thrown out the window. At some stage, all of that will come back on the agenda. It's probably not just yet.
Yeah. Well, you talk about fiscal sustainability concerns. The U.S. have a budget deficit of 6.3%, debt to GDP of 124%. To what extent are you concerned about the fiscal trajectory of the U.S., given what you just articulated about these European nations?
Yeah, again, really am. Long ago, we talked to feed the beast and starve the beast between Democrats and Republicans. And for quite some time now, that's just been feed the beast, feed the beast. One wants to raise spending, one wants to cut taxes. Nobody wants to rein in the deficit at all. And to have over 6% deficit at the end of the cycle really is a concerning place to start. And obviously rates have gone up. And so the interest bill, as everybody seems to know now, is gigantic, is basically bigger than defence spending within the budget. All of that is incredibly concerning. And I don't see any political will significantly within Congress or within the White House, whoever is the incumbent come January, to do anything about that. And so long term, it really does appear to be a concerning situation, and it's likely that the Fed is part of the solution.
Yeah. All right, let me ask you about the Fed. What are you expecting for the dots? Do you see the median moving down to 2? And if that is the case, would it be a dovish surprise?
I definitely think the dots is going to be a big focus for markets, and just given the data that we've seen, given some of the rhetoric we've had from Fed speakers, it wouldn't surprise me at all if we're reducing the number of cuts over the horizon. So maybe 24, maybe 25, maybe both. It is very difficult to say. Ultimately, I don't think the dots are a guide for policy. That's not what they're intended to be. Inherently, the macro forecasts within each individual's dots are not identical, and so you cannot compare them like for like. But of course, the market does like to focus on them. Given the rally that we'd seen sort of a month ago had taken US rates down to sort of local low, I think there is room for rates to move higher in a sort of shock fashion if we do see a more significant move higher in the dots. So I think that's the risk. I think the base case is there's some move higher. How big it is would dictate the extent to which the market is shocked and surprised. I think the dollar is going to benefit significantly if that's the case.
Fantastic, James. Great to have you with us on the show. Thanks for waking up early. James Athey, Fixed Income Portfolio Manager at Marlborough. And still ahead, we will get the latest from South Africa as the newly elected parliament prepares to convene and elect a new president. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Let's hear more from Pimco co-founder Bill Gross. Ahead of the Fed rate decision later this week, he shared his expectations on what the FOMC is likely to do.
I don't think there's much of a trade on treasuries. You know, to my way of thinking, the 10-year, which is close to 4.5%, let's call it 4.5%, is dependent upon inflation, which we'll see on Wednesday, and we'll know more because of that. But if inflation is 2%, I think the 10-year belongs close to 4%. If it's 3%, it belongs closer to 5%, and we're right in the middle. So at the moment, with 4.5% 10-year treasuries and break-evens at around 220, you know, that's a 470 basically break even for the nominal 10-year treasury, and I think we're about there. There's not much to be done until we know more.
Bill, what are the chances that we see, say, the median dot in 2024 and 2025 actually move higher? I mean, do you think there's a possibility, and what would be the reaction to something like that?
Well, I think it would be negative. You know, the Fed has basically signaled they're sort of done, perhaps 95% done in terms of raising rates. It's not that they can't raise them if the print on CPI isn't bad for the next several months. But, you know, I think the market basically anticipates the Fed to stay, and maybe in September, maybe in December, maybe one or two cuts if, you know, the current numbers continue as we've seen them.
Always interesting to listen to Pimco co-founder Bill Gross speaking with Bloomberg's Alex Steele. Now for a look at some of the other stories we're following this morning. Bill Hwang's top trader at Archegos Capital has given damning testimony against his boss. William Tomita told the jury that Hwang directed him to do the opposite of what a normal fund would. Tomita admitted to committing financial crimes, namely market manipulation and lying to banks, saying Hwang told him to do it. Tomita is the prosecution's star witness in a criminal case against Hwang of this spectacular 2021 implosion of Archegos. And Bloomberg has learned that authorities in Singapore are demanding more information from family offices and hedge funds while stepping up closures of dormant firms. Sources tell us that agencies have set out additional requirements that must be met in the coming months. The government's push to tighten investment regimes has accelerated after a series of recent criminal cases. And also coming up, we continue the tech conversation with the UAE State Minister for AI and Digital Economy. Omar Al Olama joins us to discuss the country's AI ambitions next. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Apple's AI play, the iPhone maker, reveals a partnership with OpenAI and a slew of new features. Elon Musk responds by threatening to ban Apple devices from his companies. We continue the tech conversation with the UAE State Minister for AI and Digital Economy. Omar Al Olama joins us to discuss the country's AI ambitions shortly. Secretary of State Antony Blinken is in Israel today as he presses for both sides to agree to a ceasefire. The UN adopts a US-crafted truce deal. Well, it's just gone 8:30 a.m. across the Emirates. I'm Johanna Versace in Dubai. Let's get you caught up on these markets. Another record high for the S&P forged this year. Again, a lot of, eyes are going to be waiting out for that CPI print coming out tomorrow, as well as the Fed decision. And they'll be watching for the dot plot and whether or not they get revised down, indicating that less rate cuts are going to be priced in for the remainder of this year. Apple also in focus after that AI event yesterday, announcing a slew of AI new features, including that partnership with OpenAI. But on the back of that, investors were slightly underwhelmed, and we see the stock ended around 1.9% lower. Brent also in focus. We have picked up a bit of momentum through the course of the last couple of trading days. We were 2% higher yesterday, back to pre-OPEC plus levels now around 81.50. And then 10-year yield in France also in focus. We are 12 basis points higher yesterday. So it really tells you that investors have started to account for that political premium risk after the president announced a snap election at the end of June, beginning of July. And this is a picture as well that just illustrates how negative people are turning on euro currency. A lot of short positions building up in the options market. So traders most euro negative since April. All right, let's turn to artificial intelligence and the UAE's ambitions right now. The Gulf nation has made AI one of its key pillars of economic growth after oil and is making a concerted top-down push to become a regional heavyweight. The UAE is investing heavily in the sector and has introduced a range of new businesses to achieve this. Efforts include building more data centers to power the tech, creating its own generative AI models, and seeking to become a semiconductor manufacturer. So a lot on the table. Let's get more details on the country's lofty goals in becoming a regional tech superpower. Omar Al Olama, the UAE State Minister for AI and Digital Economy, joins us now here in our studio. This is, of course, ahead of the Dubai AI Retreat event, which begins today. So very exciting event. Let me just start off with perhaps an open question, which is if you could encapsulate for us what your ultimate AI ambitions look like and how this event plays into it.
Thank you, Jemana. I think the UAE's AI ambitions are there for the world to see. We've started in 2017, and really the results that we're seeing today, both on the software side, the hardware side, and the proactive investments are testament to how these ambitions came to fruition. The AI Retreat is actually a Dubai-focused event. Dubai and Science Sheikh Hamdan wisely took a very interesting direction that I think is global leading. The first is focusing on quality of life as the main driver for AI deployment. Second is being the fastest go-to market for AI, especially AI that affects quality of life. And third, being a talent-focused ecosystem. Dubai currently boasts the biggest number of unicorns, the highest number of AI companies and startups, and as well as a talent ecosystem that really is pioneering on the global front. So this retreat really bolsters that and builds on that.
When it comes to your semiconductor ambitions, I get the sense that UAE are a lot more ambitious in terms of the types of semiconductor chips that you want to produce. You want to go for those advanced chips versus, say, a Saudi Arabia, which is initially setting its sights on producing perhaps more basic chips and starting with foundries. How do you see that playing out, and do you see potential for cooperation with Saudi Arabia?
Well, if we're going to talk about the UAE's ambitions in any field or any sector, the main driver always is we want to be number one. And I think it's ingrained in the government, it's ingrained in the people. And we want to really not think about our limitations, but think of the opportunities that we bring to the table. The UAE today is one of the largest trading partners with many countries and regions around the world. It's a very safe political environment. It also hosts the biggest number of companies from around the world, as well as American companies as well. And we're seeing that we are a strategic partner with East and West. Mostly American companies choose the UAE first when they expand. So there is no reason whatsoever for us not to become a preferred partner to produce semiconductors, especially with what we've gone through over the last 50 years as a country in terms of development.
Yeah.
We've put it out there. I think it now is about the different companies and the different countries actually coming to the table and having these conversations with us.
So let's talk about some of those American companies. Yesterday, Apple had this big event. They announced some of their new AI features, also a partnership with OpenAI. Really interesting that Elon Musk was very quick to say that he was going to ban the use of Apple devices within his companies because of concerns about that partnership and his major concerns about privacy and what was being done with the data in the back end. As a government, how closely are you following an announcement like that? And I know, of course, that G42 have their own partnership with OpenAI. So will there be ramifications?
So we're following all these announcements closely. I don't think Elon did say that. What Elon said was if it turns out that they're going to deploy ChatGPT and OpenAI's infrastructure on the OS level, then there are some security risks. And I think given the quality of work that they're doing and the secrecy around the advancements that they're pushing forward, it makes a lot of sense for them to think that way. Personally speaking, I think it is going to be case by case. Elon is smart enough to do the right thing, and I think that OpenAI is a competitor today. He's going with the open source approach. They're going with the closed source approach. For Apple, they wanted to work with the market leader. Today, that's OpenAI. I think we're going to see, as they say, the proof is in the pudding. They're going to announce a lot more details as time passes by. As a government, I think it just proves that our bets were in the right place, that Microsoft and OpenAI today chooses the UAE as a preferred partner is a great thing for us. And it also shows that we're able to ride that wave and to be a country that will hopefully become a heavyweight in artificial intelligence in the years to come.
Yeah, I mean, the thing with the ability to build these advanced semiconductors and data center ambitions is it's also very much a global business, and you rely on partnerships with some of these key companies from around the world. Again, I thought it was interesting. This is a Bloomberg reporting from a couple of weeks back. The U.S. government appears to be slowing down the granting of licenses for some key chip exports from NVIDIA, from AMD to the Middle East over concerns, again, once more about security and who exactly is going to get access to the chip and the technology behind those chips once they're in the data centers. First of all, let me just ask you, are those concerns founded?
So, sometimes you're a victim of the neighborhood you're in. When you say the Middle East, you're talking about a very broad region with hundreds of millions of people. I think concern about chips coming to the Middle East and going to China are founded concerns. Any country that has adversaries would think that way. The UAE has proven to be a strategic partner with the US. I think you've seen alignment on government-to-government level throughout, let's say, the last couple of months and as well the last 50 years. So it's a continuation of a series of reassurances that the UAE has given. I think the decision that's going to be taken in the short to medium term is going to be actually positive for the UAE. I think the US is going to work with the UAE on this, not because of just ignorance. I think the UAE is a strategic partner because of its global logistics capabilities, because of its supply chain capabilities, as well as it today is a role model for a very broad region. Whether we look at Africa or the Middle East or certain parts of the world, they look at the UAE as a key partner. And we can just see what we did in renewables to understand that. Yeah. And the US understands that the opportunity is there. It's about what reassurances we can bring to the table and how we can ensure that it's a partnership that's for the long term. As I said previously, it's a marriage, not a one-off kind of agreement.
Yeah. How closely are you involved in discussions with the Biden administration around ensuring that the use of those advanced chips is done in a way that is okay for the U.S.?
So, as you'd expect, these conversations happen with multiple different parties, whether it's in the security, government agencies, whether it's in the Commerce Department and some of the other departments as well, in the U.S. and in the UAE. So I am involved in these conversations, but there are multiple parties speaking to each other about the different reassurances that need to be given. I think that progress is very positive.
Yeah. Let me just ask you a question about the skills required to build up your ambitions. Because, if you want to build up this ecosystem in AI, it's not just about the data centers, but you also need to attract the right talent. You need the engineers, you need the data scientists. What are you doing on that front to ensure that you have the right amount of talent to enable you to realize these ambitions in the future? Because there is a skills shortage out there right now.
Absolutely. So LinkedIn did a report to see AI talent flows globally. The UAE ranks 15th globally for AI talent. Now, with the size of our population, that's a very big number. If you look at AI talent per capita, we are third globally. So I think we are a very ripe environment for AI talent. We can also see the technical outcomes, whether it's the ability to create startups that become unicorns. All of the unicorns that came out of the UAE are actually, and Dubai specifically, are actually AI companies. So Careem is an AI company, Souk is an AI company, Media.net was an AI company first, and others. The second thing is that we are able to create very advanced large language models, even though we do not have the size and the investments that certain other countries have. And I think that is just the start. We're going to do a lot more in the coming years.
Yeah, well, speaking of these LLMs, obviously ChatGPT was the main one that became mainstream. There have been many different versions of it before. I know what you're doing in the UAE has caught the attention of Sam Altman, OpenAI founder. Can you give us just an insight into how those discussions are going? And what are you planning on doing with OpenAI?
So the Microsoft investment in G42 further cements the, let's say, ability for the UAE and our national champions to work with OpenAI. Another thing, Sam Altman in the World Government Summit in February, I had the conversation with him and he said, I would love to have a sandbox where we're able to test new things in a government environment where we can actually create controlled environments, but at the same time change policies and regulations quickly to deploy and scale. I think the UAE offers that, and it uniquely is the go-to place to do that, and do that with a diverse population, so 200 nationalities, which is an advantage, with cutting-edge infrastructure, and the third, with the ability to have a government that is open-minded and is as entrepreneurial as the private sector. So I think it's going to start with Sam, but there's going to be a lot more players that we're going to bring to the table on this.
Yeah, well, it sounds very exciting. Your Excellency, Minister, thank you so much for joining me today to discuss all of your AI ambitions and, of course, a preview ahead of the big event today. That was Omar Al Olama, the UAE State Minister for AI and Digital Economy. Also coming up on our show, oil prices recoup earlier losses following OPEC Plus's decision to restore some output. Senior Director at Market Economics at Emirates NBD, Edward Bell, joins us next for his take on what's moving the oil market. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, oil prices are holding their biggest jump since March ahead of an OPEC report that will provide a snapshot of the market outlook. The rally comes on the back of a 3-week drop following the OPEC Plus decision to restore some supply later this year. This sell-off prompted the group to clarify it could pause or reverse production changes if needed. So to help us make sense of all of this market price action, let's speak to Edward Bell, who's Senior Director of Market Economics at Emirates NBD. Well, it was all just a bad dream as far as OPEC Plus were concerned. Oil is back to where we were trading right before that OPEC Plus decision. Why do you think we saw such a big round trip?
Well, I think we've had a lot of confusing messaging coming out from OPEC, right? They tried to phrase their decision to unwind production cuts as essentially them still withholding production. But if you look at where output is going to be at the end of 2024, where it's going to be at the end of 2025, it's going to be higher than what currently OPEC is producing. So they had to come out over the course of last week and say, well, actually, we're going to adjust this policy as needed depending on market conditions. So a little bit of, well, if that's the case, are you really adopting this kind of long-term strategy, or are you really just kind of adopting a much more flexible approach?
You know, I was in Riyadh and reporting on that OPEC Plus meeting, and as you say, it was drip feed of information as it was coming through, and then the response out of the energy minister. But one thing that perhaps people are not talking about enough is that these are just targets, but in reality, there have been nations who've been massively overproducing versus their quotas. I was looking at the Russian numbers that came out yesterday, showing that output has stayed way above the level that the country had pledged to OPEC Plus, even as it made its deepest cuts in a year. So they're still overproducing. How does that get factored in to the supply outlook for oil from here?
Yeah, oil markets are going to respond to barrels that are put onto ships, that are put into pipelines, and that are moving around the world, going into refining complexes, rather than these kind of targets, which effectively are almost kind of arbitrary. And in a way, when we're talking about cuts, we're talking about cutting from a sort of almost imaginary kind of baseline number, something that doesn't really exist anymore for many kind of countries. So you do have this problem of overproduction for some countries, that is what they're going to need to be cutting from, but still they're only agreeing to cut from this baseline number that was imposed on the market a couple of years ago that doesn't really reflect the reality of what producers are doing right now.
Yeah, what's your take on the decision to push back the announcement regarding the new baseline levels to the end of 2025? It feels like they kicked the can down the road, but did they have to do that to keep unity within the group?
That was, I think, probably the most surprising outcome of the OPEC Plus meeting that we had last week, that they were meant to have those numbers done by the end of June, by the end of this month, and they decided to push them back and only have them apply for 2026. I think what that does is it prevents some of the discord that could be potential within the OPEC Plus framework if countries are unhappy about receiving a baseline level that is too low based on their own estimates, and to get them sourced out from these third-party providers. It helps to insulate OPEC itself a little bit from who's to blame for getting more or getting less, but ultimately it doesn't address the issue that you're going to have to have this discussion about allocation of production targets among members, and that's probably going to be a little bit of a politically uncomfortable one.
Yeah, well, something to think about. End of 2025, I suppose. Let's bring it back to the macro. We've got this big Fed meeting coming up tomorrow. We've been speaking to other analysts about the dot plot projections and what sort of messaging we're going to get out of the Fed. How does that tie back to the markets over here? If we are in a higher for longer situation, what does it mean for some of the local markets that you look at?
Well, so far, the regional economies in the GCC, UAE, Saudi Arabia have been quite resilient to the fact that interest rates have tracked exactly with the U.S. rates. So we haven't really seen a material slowdown in terms of economic activity across the GCC economies. In fact, we actually revised up our non-oil GDP forecast for the UAE recently to about 5% growth. So there is quite a lot of momentum still happening thanks to domestic initiatives as well as substantial government investment that's happening. In terms of market interplay, we're not really seeing it being a drag. There are some external headwinds from these higher rates, though. It does make the dollar that much stronger against many of the kind of source currencies for visitors coming into this region, for where we might be exporting some of the non-oil products to. So it makes some of those goods relatively less competitive. But overall, we're not really seeing a material negative impact from higher rates so far across the GCC.
Question for you. I looked at the Saudi Arabian GDP numbers that came out on Sunday. Oil sector was down 11%. You had the non-oil increase, I think it was 3% around there. As an investor, what do you place more weight on the non-oil sector now because this is what these economies are trying to do, or do you still have to take into consideration the fact that there has still been a double-digit decline in oil GDP growth?
Well, I think from an investor point of view, it's where you feel you have the most access into those markets. And as we're seeing more and more diversification strategies being really implemented in a material way, particularly in the kingdom, I think that opens up a much bigger investable universe for Saudi Arabia, for investors who want to get exposure to the Middle East region. If we're talking about oil in Saudi Arabia, it's really Aramco that you're talking about. So whether you're interested in the equity offerings or any potential bonds that might be coming from Aramco, that could be the play there. But if you're looking for the rest of the Saudi Arabia Vision 2030 and investment story, it's going to be other parts of the non-oil economy that you're going to be interested in. So we did see a little bit of a slowdown in the Q1 numbers, but we're still expecting to see fairly robust growth, about sort of 4 to 4.5% in the non-oil sector in the kingdom this year.
Yeah, and given where growth is around the rest of the world, people will take that. Edward, thank you so much for coming on the show today. That was Edward Bell, Senior Director of Market Economics at Emirates NBT. Well, also coming up as well, South Africa's parliament will meet to elect a new president later this week. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Well, South Africa's parliament is preparing to reconvene on Friday to elect the country's new president. This will be the first sitting of legislators since the ruling ANC lost its parliamentary majority in last month's national elections. President Cyril Ramaphosa is expected to seek re-election at the session. Meanwhile, political parties are in talks to form a new government. The centrist Democratic Alliance is amongst the parties that have expressed interest in joining a coalition. Really happy to say that someone special is in town. Jennifer Zabazaj, our Africa correspondent and my co-anchor for the show, is here in person.
Yes.
Great to see you.
Nice to be here.
Perhaps you can just give us an update on how these talks are going vis-a-vis the composition of the next government. What does it look like at this point?
So, Jumana, the interesting thing that we got on Monday was that the next sitting of the parliament is going to be this Friday, right? So the first step was really the elections. Next step is forming parliament. You mentioned, of course, Cyril Ramaphosa being re-elected as president. But the big question mark is really what this next government is going to look like. And so it was surprising for many people to hear from the Chief Justice on Monday that the parliament is going to be seated regardless, because we're still hearing from a number of parties, in particular Jacob Zuma's MK party, that are saying that they're going to protest any sort of seating of government. And so the question really is, what are these political parties? What is the makeup going to look like? We've heard a little bit of potentially an ANC, DA, IFP potential tie-up, but then of course there are still a lot of people internally who are just, against forming a government with a lot of these.
It just feels as though right right now, as far as investors are concerned, the best outcome would be a partnership of Democratic Alliance with ANC. It's deemed to be the most market-friendly. They're most intent on pursuing structural reforms. Is that sort of the feedback you're getting from the investors that you speak to?
Absolutely. And the good thing is that the DA is still the main opposition party, right? And so there is an opportunity there for these two parties to come together, even though ideologically they are very far apart in a lot of ways. We heard from Cyril Ramaphosa saying that the main priority is policy continuity, and in particular accelerating a lot of these economic reforms that we had seen with the last administration. And so, yes, the DA could potentially be a partnership that would work. But the big difficulty right now is getting a lot of the internal ANC people on board with this sort of matchup. And not just that, a lot of these other opposition parties have said they are not going to work with the DA, some of them calling them, the DA in particular, elitist. And so they really do need to come together because, as we are hearing from the investor community, there needs to be an acceleration of these economic reforms.
And just what is the likelihood of Ramaphosa staying on as president, do you think?
The expectation is that he will stay because, of course, the ANC is not the ruling party anymore, but they are the biggest party. So that is the expectation, even though we have heard again from some opposition parties saying that they do not want to see Ramaphosa as president. But the likelihood is that the ANC is going to continue backing him, and potentially we will, we'll see this inauguration that is supposed to happen in about a week's time. But, the big thing to watch is going to be what's going to happen on Friday.
On Friday.
Yeah.
All right. Well, luckily, you're here all week,
I'm here.
Jennifer, and you can tell us what's going on. That was Bloomberg's Africa correspondent, Jennifer Sabasasha. All right, quick look at U.S. equities before we head out. It is looking like a positive session for European markets today after yesterday's sell-off. That is it for our show, Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe.